When it comes to calculating your gold IRA returns, you might be wondering how to assess whether your investment is actually growing or if you're just holding onto your gold with little to show for it. If you're serious about making sure your wealth is working for you, especially in uncertain times, this video will walk you through everything you need to know about gold IRA returns. I'll also share how gold IRAs are outperforming traditional retirement accounts, like 401ks, in protecting your wealth. But before we dive in, if you're serious about protecting your wealth and want to learn why thousands of Americans are turning to gold IRAs to safeguard their savings, I've included a link to a free guide in the description. Trust me, it's worth checking out if you want to stay ahead in today's financial climate. All right, let's get into it. When you're calculating gold IRA returns, the first thing to understand is how gold itself has been performing. Over time, gold has proven to be a reliable hedge against inflation and market volatility. Unlike stocks or bonds that can see significant drops, gold tends to hold its value and even rise when the market is shaky. Now, there are two main components you need to focus on when calculating your returns: the value of the gold itself and the fees associated with managing your gold IRA. Let's break it down. First, the value of your gold is the amount of gold you own multiplied by the current price per ounce of gold. This is straightforward. If you have 5 ounces of gold and the price of gold today is $1,800 per ounce, your gold is worth $9,000. But here's where it gets interesting. If you're holding your gold in an IRA, that value can grow tax deferred until you withdraw it. This means more of your wealth can compound over time, especially when gold prices are trending upwards. Next, you have to factor in the management fees. Many gold IRA companies charge annual fees for storage and account management. These fees can eat into your overall returns, so it's critical to factor them in. Typically, these fees range from $150 to $250 a year, but they can vary based on the company. Compare those fees to the returns you're getting on other investment types, like stocks or bonds, and you'll quickly see why many retirees are turning to gold IRAs. They provide solid returns without the crazy volatility of the stock market. What makes a gold IRA even more attractive is its potential to outperform traditional retirement accounts, especially in the long run. While the stock market fluctuates and bond yields are at historic lows, gold maintains a steady course. In fact, gold has been known to increase in value during times of economic downturns, when other assets may be losing value. Now, the real question is, how do you track your return on investment? You don't have to be a financial expert to do this. Each year, you can easily track the performance of gold by checking the price per ounce and then comparing it to the previous year. If gold has gone up, so has your investment. It's that simple. Of course, there will be ups and downs, but the overall trend should be upwards, especially when you consider gold's historical performance. If you're wondering whether a gold IRA is right for you, the answer depends on your retirement goals. If you have more than $100K in your IRA or 401k, or even if you have $5 million in savings, a gold IRA can be the perfect way to diversify your wealth and shield it from risk. Many American retirees are already taking advantage of this strategy. To wrap things up, the key takeaway here is that gold IRAs offer a unique way to preserve your wealth by investing in a tangible asset that holds value over time. When you're calculating your gold IRA returns, focus on the gold's value, subtract your management fees, and compare that to traditional investments. It's a strategy that's been around for a reason. It works. If you want to learn more about how you can start protecting your wealth with a gold IRA, don't forget to check the link in the description below for a free guide on how to get started. This guide is specifically designed for American retirees with at least $100K in savings. And if you're looking to safeguard your wealth in the next 2 weeks, it's the perfect resource. So, take action now and make sure your retirement savings are protected for the future.